Hello, good afternoon. On the name of CVVC, we welcome you today for this online event. Today, we will explore the difference in crypto investments versus traditional finance. Without any further ado, I will welcome Mr. Maxim Balashevich.
Thanks, Fabiola, for introduction and inviting here to nice rooms of CV Labs. I'm Maxim Balashevich, founder of Santiment net platform for behavior analytics for crypto assets. And today we want to talk a bit, covering many different topics. On one side, we will say what is the difference between classic finances and crypto assets. And then we will try to go a bit more in details how this knowledge of analyzing the networks can be applied in real life. Crypto markets are different. Yeah? So it's the first thing each of us should understand. They have similarities to classic financial markets, but they are different. And the easiest way to see the difference is volatility of crypto market. Yeah? Volatility and the cycles, how the price moves up and down. In the crypto market, it's much more frequent. In 10 years, you will have, since 2008, we've had 3 cycles already. When classic finance, we only now entered big recession. And volatility itself, if we take it as a risk measurement, it's much higher. As we see in a number of, in S&P, typically we have 14–15% per year. In Bitcoin, if we take it as an example, it's 75%. It's a difference of magnitude. Big volatility means high risk, but also high reward. How can we make use of it? First, if we want to analyze the crypto market, we need to identify what are the proper data sets. What are we paying attention to? Now, the interesting thing is, we used to, in the classic finance, there is a price feed, so we can trust it. You cannot trust price feeds in cryptocurrencies. There have been many, many cases, and it's still going on, how it's manipulated, wash trades, whales manipulation, pumps and dumps. The data feed, if you take it only as a price, is not reliable. It's not that it's not improving over time. It's getting better and better, but you need to take it into account. The good news is that it's not only the price feeds which you have to pay attention to and which is available. It's also on-chain, social channels where crypto traders or crypto networks, participants talking to each other, and development activities who are building the network. All 3 of them are brand new. They don't exist in the classic finances, but they have huge impact, and they reveal a lot of truth about what's happening in the crypto market if you know how to read it. We on Santiment, we came in 2016 with this assumption that it's a new market and you need to build new tools. So we've been building it since 3 years. And at the moment, it does help you identify tops and bottoms or understand better behavior of each crypto network and contextualize what's happening there. And a few examples will be shown here. It's based on real-life examples. First, once we know, okay, there are new data sets, on-chain, take directly from blockchains or social channels and activity. It means if new data sets, we are likely need to build new valuation models, and that's right. This is the first way we start. In the stocks, you have P/E ratio. You don't have P/E ratio in cryptocurrencies. Bitcoin, Ethereum, they don't really, it's not a corporation or companies generating revenue, having expenses. It's completely different to decentralized networks, but you do have some way of evaluating their activity of worthless. How much worth is it? This NVT, a network value transaction, it was one of the first models created even a few years already ago. And we will start from this. It's a very simple concept. We take how much transactions are done on the network. So we say if it's a good network, there should be a lot of transactions, and we relate it to the total valuation of the network. Yeah? Network value transaction, so this is what it gives you as a proxy. If there are a lot of transactions happening on the network, but the valuation price of the network is low, we consider, okay, it's undervalued. If it's other way around, the valuation network is very high, but there are not as many transactions or activity on network as it's supposed to be, we say maybe it's overvalued. It's as simple as it sounds, it's quite a good model, and we built quite a few models based on it, and they're showing not so bad performance too. But we can go even one step further. Now, the next one is more complicated, okay? And it's like evolution of evaluation networks, how you can evaluate networks. Now, it's MVRV, and on top of it, long-short difference. Now, I will explain by steps. So on the chart, green line is the price of Bitcoin, and there are some blue lines and red arrows. So what do they mean? MVRV, it's market value to realized value. Now, what we look here at, what is the current valuation of a network, market cap, so-called, in this case, Bitcoin, and what is the price each token holder paid to obtain his Bitcoins. And we look into it from behavior point of view. If the total valuation of the network, let's say 200 billions, but the price which all token holders pay to obtain it, 50 billions, so there is a difference on 4, and based on human behavior, we believe there is a high chance they will, once the market is not sure anymore, any bad news or whatever happens, it will correct down very fast, because on average, a lot of token holders are in profit. Yeah? So this is a new valuation models we couldn't apply. And in long-short difference, we calculate what is the price of those who obtain it in the last 30 days, and what is the price of those who obtain it in the last 180 days. So short-term players and long-term players, and we take difference on them. And this blue line you will see when the short-term holders outperforming or vice versa, and this flipping in between when the long-term holders start outperforming short-term, you will see it's happening mostly, or each of time which recorded in the last 9 years happened when the bull trend is established quite strongly. So, and it's a very strong signal, part of the model when you take into account, okay, now I can, with low risk, go into the market, bull trend is here. So it's a both valuation model and also a kind of part of the trading strategy. And it's different, like in classic finances, you don't have this data source like on-chain. You don't apply it, you don't know what is an average price all stockholders paid for the stocks. And you cannot apply this kind of models. Now, one step back, we take only on-chain and few new innovative valuation models. Now, let's look one by one into data sets. On-chain is good, but what about dev activity, which I mentioned? It's surprisingly still not deployed as much as we believe it should be deployed in evaluation models, because all of the networks, cryptocurrency networks, they're open source networks. Yeah, there is not much, if at all, closed source code. Their value coming from people using from different sciences open source code and building value on top of it. And as long as the developers who are building open source networks bring in their efforts, their time, it means there is a higher chance there will be even more value built on top of it. Yeah, it's a kind of simple explanations. And we built a unified metric where regardless of how many commits or comments developers doing, there is a number which lets you identify, okay, this is a lot of developer activity or less. And when you start comparing the network, there will be no surprise. You will find out that those who are valued the most, they are building a lot. And Ethereum, as an example, is the most with developer activity network currently in the world of cryptocurrencies. If you combine especially people develop a network and build on top of Ethereum, this is by all means the most advanced network at the moment, at least. So dev activity, very good to pay attention how much effort developers who are high skilled, high paid normally building for this on the top of this network. Now, social volume trends, you can call it. It's also, it's considered to be very alternative and niche data source for classic finances. In the crypto, it's one of the key data source, you can, by measuring of activity of network participants, how much they token, what is the token, is it growing over the time, you can get much deeper insight in the health of a community around this network. Yeah? On-chain, you measure how much they actively commit their money, how much they do interactions. On the social metrics like this, you have how much are they talking about. Crypto networks are very social in nature. Not only it's important to see how much the token, it also gives you a lot of insights and alpha. You can predict based on some patterns when the network might be overpriced or underpriced. And now this combined, initially we showed few very quite simplified evaluation models. Now in the new data sources, once you spend some time and you start understanding the mechanics behind cryptocurrencies in general and each specific network, you can start creating new approaches how the alpha can be found and applied. And alpha in this case, when you can enter the market before the majority enters, and when you can leave, or you should leave the market before the majority dumps, and you're the last one. And this is very important when you leave in the crypto market. When once the market goes down, it goes very fast, much faster. You can lose 50% in 2 days. So it's good to know how to generate this alpha. Just a few examples. Based on these data sets, we talked before, whales and top holders. Yeah, this is again specific of cryptocurrencies. There are some group of token holders which we call whales. Depends on the network, could be 1% of total token supply, could be sometimes 10, 20 if it's the smaller tokens. But there is one pattern, once the whales decide to leave the market, it impacts the price. Not so much for Bitcoin and Ethereum anymore, it's quite decentralized, token holders, no one has a big percentage supply. But once you go down the list, and it's very important, once you go beyond the top 10, the impact will be huge. And you really need to know when the whales decided to move out of their holdings. The good news is you can track it. Yeah, you can track it. We labeled whales addresses, we labeled exchange addresses, so you can see. And there's a few real-life examples. Whales dump, it's like a bit darker lines. The moment they go out of their holdings and they move to exchange, the price will follow very soon. There is almost no exception. Yeah, it happens over and over again. So whales and top holders' behavior, once you understand them and you keep track of them, you are in a good position not to be the last one, at least to be almost as good as they are. Now, a bit more complicated model maybe to explain, but when you understand, it makes a lot of sense. It's very easy to follow. We mentioned NVT, net portfolio transaction, in the very beginning. And now it's, we call it price DAA Divergence. What is it? Well, price is clear. DAA, it's daily active addresses. How many, on a daily basis, active wallets or addresses participating in interaction with each other? And there are a very interesting pattern we noticed. Once price is growing, of course, many new players coming into the market. They're very excited. Many new wallets created. Small holders are growing fast in numbers. But there will be some point of time in the top of, at the end of the trend where they cannot follow up anymore, or excitement is actually already over. Price is still pushing up, but there are not as many as before new addresses created and interacting with each other. So divergence emerge. Price is pushing up, but the network activity is not growing up as fast as before. So this is on this chart, the red lines, and soon thereafter the price will collapse if it's a bad case, or correct if it's a good case. But the same happens in the bottom. The price can be correcting for some time, and in cryptocurrencies there is much more irrationality. It overshoot on the way up, way beyond expectation. It's also go down much more than rationally you should expect. And at some point when it goes down too much, it's still network activity start growing, or it's more than it should be at this price level. And then you notice another divergence. And recently, actually, 1 or 2 weeks ago, this is the last green line, our signal or our model fired a signal. So you will see network is active, price is going down, but network is getting more and more active. So it's a kind of for you buy signal. You could be one of the first one. Yeah? So it's another alpha how you could exit and enter the markets. And last example for today, so that we don't overload with too many new examples. We call it multi-volume approach. And it's similar like before, where we say there are always divergences on the top and the bottoms. Yeah, price goes too much, but network is not going so much, or price goes too much down, but actually network starts to recover. In these divergences, we now build a multi-approach where we take not only on-chain data, which is here on orange on the bottom of the chart, but we also measure social activity. And they show exactly the same patterns. Yeah? The crowd will get very excited when the price goes up, but at some point of time they cannot get more emotional excited. So you will notice the divergence. Price is pushing up, but crowd is not talking to each other as much. And the same, they're not interacting with each other as much on-chain. So that's why we call it multi-volume approach. And the interesting thing is even as manipulated trade data we have, but the patterns, these patterns, reflected the same. So we can also put, we didn't put on this chart, but if you put on the lead, and then these two social volumes and on-chain volumes, also pricing volume on exchanges, regardless of the effect or not, you will see the same pattern. So 3 different data sources showing the same pattern, and it's again quite unique alpha. It's not utilized yet by, from what we know, market participants. So it does provide you with some good weapon how to understand where the market is overvalued or undervalued. So these were a few examples to get you acquainted with the material of crypto assets and to give you some thoughts for some ideas for your thoughts way to investigate. We have much more on the platform, and I think it's good if you take some time, maybe reflect and come with your questions. So if you want to ask some questions on all the strategies which are available or which we are developing in-house, where we're constantly discovering new things. So you can come to us to our social channels. We're very active on Twitter. We have our own Discord channel. Please come ask questions. And once this quarantine is over, you can visit even us. We're here in CV Labs in co-working space, and we are in Crypto Valley present. But yeah, maybe for this we need to wait still a few weeks. On the social channels, yeah, Discord is the most active, where all those community and our developers talking to each other. But also on Twitter, we publish constant updates. And as a last chance, yeah, you can subscribe to our newsletter and just get maybe once per month update what new is on the market and on our platform.
Thank you very much for your attendance today. We hope all the information was really relevant for you. If you have more questions, feel free to reach out directly to our expert, Maxim. And in the meantime, please stay safe, stay healthy, and keep tuned for our further events.